What's happening, guys? Welcome back to another Sunday Scan. We have Nate on this week, and we have a lot of great market topics. So let's get right into it. Nate, what are you watching for the week, or what have you been paying attention to? What have you been seeing in the markets? There's been a lot of wild movers. So what do you got?
For sure. First off, thanks for having me on. And secondly, happy birthday to you.
Thanks.
Um, so this week, I would say the market, been a little bit different. There's definitely a lot of opportunities. There's a lot of runners. There's some big moves. But for me to have these sort of A-plus moves or these A-plus setups, typically it's something that happens off the open. They're gapping up huge. There's some really big opportunity. I would say the closest thing to that this week was ACB and CGC. But the problem is they either gap down or they just had a bunch of chop, or in my situation, I was running on a generator and I ran out of Wi-Fi. The internet went down and I ended up missing a good portion or a good chunk of that move. So that kind of ruined the A-plus nature of that. But those, I would say, were the two biggest ones of the week. And otherwise, there's been a lot of action. There's been some great trades. But for the most part, if you're going to be capturing a good portion of the move, it's multi-day. You have to be either swinging short on something like DJT. And I'll just pull up my chart here. DJT's been fantastic, but you have to swing it short. There's a lot of gap downs. It's hard to chase a $2 gap down to then capture the next $3 down. But the problem is the borrow rate's so high. I think it was 700 something percent or way up there. I think CGC was similar versus something like maybe ACB. So again, big moves, but you got to be a position trader to really capture them. It's very difficult to react to something that just flushes off the open and then just kind of goes sideways throughout the day. So that's been a little bit of an adjustment. And then there's also just been such underlying bids on every single move. You nail it, you cover some of it, and then it just sort of slowly heads all the way back up to your entry. And, you would have been better off covering the entire thing. So it's kind of like a catch-22. You're either not patient enough or you're too patient. It has been my experience this past week. But we've had some crazy small cap momentum. Swing trades picked back up. Two standouts that I had: HUBC, which was from 90 cents to about $1.80, and then STI, which so HUBC was this trade right here. I had a nice little trap day, good volume, and then we captured that gap up and sold the majority into 160, 170 range before getting short. And then the other one that's been slowly building, should be familiar to everybody, is STI. We've talked about it. It started with the liquidity trap setup that I had gone over. And just to sort of look at the technicals here, and kind of think about how these big moves actually happen. If you look at the low here, it was 232. And if you come over here, it's 228 and it's 230, right? So they go back, looking left, they trigger that stop. They go just below that prior low before they rip it right back, and then we're back up towards the highs. So you'll see that on a lot of trades. And I feel like a lot of people put their stops at the same points. They stop out and then the move happens, which can be frustrating. So I think it's all about, sizing and giving yourself a little bit of a buffer just so you're not making the same decision as everybody else at the same exact spot, because they know that, and they'll flush you out and then the move will happen. So that's a little bit of the recap for this week. But I would say one of the, feedback driven, from comments in the YouTube channel, a lot of you guys like when I go over some of these charts for the week and discussions and kind of what to look for. And this could look messy with all these lines, but these are all the levels in the discussion that happened in IU over this week. And I think these are the ones where most people get chopped up on. And I think that, we have the momentum room and we have the lounge. And I always joke about, whatever everybody's talking about in the lounge over and over and over again is the one that you want to absolutely, avoid. And obviously Friday, that was MDIA. And, I see people saying, this one's tiring. This one's so tough. This one is hard. There's so many traps. And these are all signs that you need to recognize. You need to hear yourself saying, because that means hands off, right? And there's been so many times where there's big opportunities and maybe you nail that first move, but I give myself 2 chances. And if I'm expecting it to stay heavy and it ends up flushing into key support and soaking and holding that trend, I'll do that once or twice. And if it ends up holding stronger than I expected, that's it. I'm going to let it go and leave it alone. So 320 was the first level on Friday that sort of identified as this is the only spot to be patient with the trade. Otherwise, if you're shorting into the parabolic move, you have to be covering into support. Same thing again, you can kind of see, and it goes and clears out 370s, comes back in and it holds over VWAP level. And then we start to actually base at 370. So 370, sort of the clear out level, comes back. Now this little exhaustion move slams down, ends up holding 370s from this point forward. So everybody that participated in the stuff move, whether it be over here, whether it be over here, whether it be right here, they're now all upside down. The only way to exhaust that kind of side of the trade out is by some sort of parabolic move or a huge stuff move. The problem is we had 1, 2, 3, 4 stuff moves that were immediately soaked. So whenever you have a stuff move that is immediately soaked, that means you're probably on the wrong side of the trade. And that's when I either want to get out or size out.
Yeah. Yeah. And with these like outlier moves, you have, like you're saying, with those dip and rip candles, there's unusual underlying demand for it. And, every time it flushes into that key level, soaks back up. And so you have frustrated shorts and you have that outlier demand. And then when, the key level starts to shift from that support level and then where it was stuffing or that resistance level, when that now becomes a support, you now have a bunch of upside down shorts plus that outlier demand. So you can really see how these things go far, using those tricks like the dip and rips and the stuffs.
Yep. And it's just, it doesn't mean that you're wrong. You're just early. And there's too many people off sides anticipating the same thing. So the only way to get those people off sides out is by doing that one more move or that, extra leg up. And that's exactly what you saw over here. But then you have to still recognize, is it holding trend again? And for me, 450 became the only level that I was really interested in because it's not about nailing the top. And yeah, you could go back and say, yeah, 6 was a good short. But if it went to 7, 8, 9, 10, we wouldn't be having this conversation. So for me, I want to get to the point where I'm on the same side as everybody that is trying to get out. Longs are now looking to exit. I don't want to be on the side where, I'm short and dip buyers are still buying and shorts are still like nervous and trying to, buy on the offers and get out of their position. I want to be competing with those sellers. And so that's exactly, you can kind of see by taking sort of a step back, looking at this chart, and you can see 480 is really the major level. And then really the spot where, I would say that everybody's on the wrong side was that 450 level. And a lot of people get, obviously smoked on the front side of the move, but really the first point of real, maybe edge is this 480 break and then this 450 kind of confirmation that it wants to stay heavy. And, obviously it went right back down. You can see how all the levels on the way up were little spots where it paused on the way down. And so I always like to use those same levels on the way up for confirmation on the way down. We had the same stuff, VVPR, earlier in the week. And these are all the ones that, really bent people up. But you can still see the same kind of situation, failed follow through setup. Where's the edge? Is it trying to find the top? Or is it after it flushes under that key support, retest, and then it fails? And that point versus that VWAP level or 850s is way safer than something at 950s. Same thing, CADL we had. CADL was another wild one. You've got that same sort of consolidation. And you can see, all higher lows. So yeah, you had that stuff move slam down, but right after that, we have this big buyer at 590s and you have to recognize that. And if you don't, obviously this happens pretty quick. And then the last couple, CXAI, we discussed this week. And this was another one where, again, there's a lot of traders that are just a little bit offside. So they have to do just a little bit more. You've got this top 650, 650, 650, 650. Do just enough, clear them out, make them think it's going to the moon, comes back. And this is the first point of edge where it fails to follow through under that key level and starts to break down under the 580 range. So that one, and then DXYZ from Friday was the same situation where the sooner you can identify this stuff, the sooner you're going to be safe. And, this particular situation, I always look at where the supply zone is, 48s, right? So they're putting in a top at 48, selling. People start to get confident, and they use 48 as sort of a guide until they end up clearing it out. So what I focus on is where that supply zone is and where the demand zone is. So 40 was originally where it was right off the open. Then you can see they come in at 42, then VWAP, and we end up taking out that supply area. And obviously there was a lot of people off sides and mean reverted right back down to that level. So those are a few things, little tips and tricks that I use. And, I know, Chris, you pay attention to, some of these liquidity traps and all of those. And this is what you have to do. It's no different than the daily charts that we look for, the same thing on the intraday moves.
Yeah. And, those tricks of using like the supply zone and the demand zone, they're super helpful. And like one thing that's helpful for me to think about is like with that supply zone, you see how many times it tests and it keeps retesting. But think about it. If there's 3 million shares that are kind of in that supply zone, every time it tests, it's knocking some out. So it's now down to 2 million shares, 1 million share, a couple 100,000 shares. And if people are still using that, thinking it's like an iron clad level, it's not. You get down to the end of it, and that's where you can see where it crosses over that point where that resistance now becomes support. And that's a huge shift because the demand is still there, but now that supply zone is depleted. And so now you need a whole tape reset. All the shorts are going to get squeezed out. The longs are still there. And then when you have all the chasers get in, and all the shorts are blown out, then you start to get some top heavy action in that. So, and that's when you can have people getting off sides, and that's when the backside of the move actually happens. You just think about like where's the average person's average cost, and like what are they thinking and doing? And once that shifts from being a fight and grinding higher and then getting blown out to now a lot of longs are chasing up there. It's top heavy. Now they're trapped. It starts to break down. Now they're off sides, and it's just the same thing in reverse. So Super helpful tricks.
And you want to pay attention to just that sort of slow trend as well. So if you have like a stuff move and then it just slowly kind of fades off, but it's holding a general support level, or if you have like this, a good example actually would be HUBC into the close, and just right here where you have this flush move, and then it just slowly kind of grinds and grinds and grinds. A lot of people end up sort of adding, and then they end up reacting into this push right here because it's, nerves and the potential of a swipe into a circuit and all these different things. So you want to recognize when it doesn't stay heavy. This should be staying heavy at 150s if you're going to be scaling or staying patient. If it doesn't, you want to be cautious with your ads, because if you add too many, you will be covering here, which is exactly what they want because they know you're off sides. So they're going to force you out. You're right all along, but you did just too much size to feel comfortable, and you had to react emotionally just to protect. And that's exactly what happened. And you can see immediately, they stuff into this level, and then the bids just absolutely drop. So very similar situation, exactly what Chris was saying. Just be aware of that. Be aware of these kind of slow moves. For me, I want to exit. If I'm wrong, I want to exit because I'm wrong. I don't want to exit because I have to. And that's what a lot of people do is they wait until they have to, until they're panic mode, until they're like, oh crap, what if this goes to the moon and in a circuit and I'm stuck? So just think about that. When you start to scale into something, it should be doing exactly what you were expecting. And if it doesn't, just size down or move on. Wait for that next setup. I feel like a lot of times, and I had tweeted this out on MDIA, how many people are trading it, after the first or second, attempt? Are you actually trading it because there's edge, or are you trading it because you want to nail it, right? Because you want to figure it out. And I honestly think that is a big issue with small cap traders is it turns into this, I'm going to figure it out, I'm going to nail it, versus is there really actually an edge here? And a lot of times you'll realize that there isn't.
Yeah, totally agree with that. Just been a ton of wild movers. I mean, really in the market, we had some big moves in the large caps too. We had some moves in SPY. So I kind of like broke the week down into like two different parts. Like the first half of the week, what I was paying attention to was you had like rising bond yields, and we talked about how that can weigh on small cap companies and be like a drag on them. So on last Sunday Scam with Judah, he and I were actually talking about how small caps look like they're setting up well, and they look like they're trying to play catch up, especially with the Fed running things a little bit hot. But on Monday, the thesis had to change. You had bond yields were spiking, and that's like a huge signal to me that it's risk off in some of those interest rate sensitive indexes. So that was a really nice trade that I had by identifying when those bond yields were spiking 3% in a day. Like those are large moves, and basically looking at what has relative weakness directly correlated to that, and then using that as a guide for the next couple of days. And so I was able to have a good trade on IWM using puts and just using that, the TNX, the 10-year interest rate as a guide. It's like a 1-to-1 correlation for those couple of days. And so it was really helpful to have that. And so that was like the first half of the week. And then the second half of the week, you had, especially on Thursday, you had some of the sharpest moves in SPY that you've seen in a couple of months. And, there was a couple of reasons for that. You had some geopolitical headlines come out. You had like some Fed members coming out and saying contradicting things. So you had like a confluence of things. I don't think it was just one thing. You had a confluence of things come together, and that resulted in a lot of put buying and a lot of VIX buying. And so that's like people expecting volatility. And there's something I kind of want to touch on with this theme, is that especially since the rise of 0-day to expiration options, as options get shorter and shorter in timeframes, what we've been seeing is that instead of funds or people who are in the market hedging their longs all the time, so like always having put hedges on or things like that, now they're doing it only when they need to. And so like the theme that was happening is that in low volatility environments, in bullish environments, people are just watching the puts or their hedges just, decay and go to nothing. And that can weigh on the performance of a fund after a while. And so what we've seen is that instead of them perpetually having those hedges in place, now they're just waiting for an actual bad headline or a negative catalyst to happen. Then everyone hedges at once. And that activity of them buying puts and buying volatility, those can actually drag SPY down. And so I think that's really what we saw on Thursday, is just, we went from no one being hedged to a couple of bad headlines, and then everyone hedging, and then the hedging itself dragging the market down. And it was a big opportunity that I missed, because I was expecting some of that vol to come off towards the end of the day and get a nice rally out of it. But something that I was reminded of is that in very low volatility environments, it takes a while for that premium to kind of build up. So going from no vol to a little bit of vol is not necessarily a recipe for it to melt off and rally up yet. So it takes some time. And so it took until Friday, the following day, for it to start to melt off instead of Thursday. But definitely had some good, clean moves this week. Even things like AMD, it was down 8% in a day on that. I mean, those are, if
big
you
one.
Nail puts on those or short it, if you get your entry right, and if you're looking at the index to kind of act as a guide, it's such a smooth, clean move. And so identifying relative weakness, identifying, what's it trending with the market, and then just having it trend down so cleanly. I mean, those can be major opportunities. So that's really how I was viewing the week from like more the macro perspective and the large caps, but definitely some really good moves.
SPY was crazy on the on that pullback. I did a little bit of the options. Again, I didn't have internet that day, so I was hotspotting in. But the 515s or so, they went from like a quick 10 cents to like 70 cents up to like a buck 30, something like that. But I was just watching some of those SPY ones. Again, gambler's paradise, but 2 cents, 4 cents to like $4 or $5. Pretty insane. So I'm sure some absolutely banked and scored, but again, the key is just to not continue to try to do that every single day, because that's what most people do.
Right.
But you'll notice too, when he was talking, I just put some of the lines on SPY and in AMD, but it's very similar to the same setups, the same kind of thought process as the small caps. You're trying to identify that channel. And one like quick kind of thing that helps me is, I put a price alert, right? So if these are things that you're watching, identify that more macro kind of channel and put a price alert at the top and the bottom so that you're reminded of it, right? And then that way, if that price alert hits, you've already done the work and you already know that that's a key level. If that breaks, then you can react that much quicker. So just a kind of an idea there. I know that price alerts help me all the time because, as you flip to the next stock, you already forgot AMD, and then you look back and you're like, man, that would have been a great trade. So
yeah, especially when so many things
simple that you can do.
Yeah. Okay. We have a couple of T-shirt winners for the week. We have Jay Lemire, 5922, and Extremely Josh, 6837. Congrats. Both of you have won a T-shirt. So email webmaster@investorsunderground.com to claim that prize. And now, as we head into the next section, neither I or Nate are financial advisor. We are not financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. So, Nate, do you want to kick us off with a couple of your watches for the week?
Sure. Now, again, on this particular style market, or in this particular style market, like I said, I haven't really been coming to the market with this is the one, this A+ type setup where I want to react to it right out of the open. So it's been beneficial to kind of just have an understanding of names that I'm interested in, but most of it is 9:45, 10 a.m., maybe a little bit later on, something like CGC. You can see it had multiple kind of clear out moves. This is another example of sort of identifying, key levels of resistance. They did multiple high day clear outs. So, you had this first initial move, comes back, then clears out, comes back again. It's very difficult market as far as getting conviction on some of these names. But the more you zoom out and look bigger picture, I've had better success with. The more that I'm trying to kind of zone in and get that, absolutely nail the move, I feel like the more I get chopped up. So think about that when you're trying to get into a particular position. Try to zoom out a little bit, and it's been super, super helpful because a lot of times you need to leave room, make sure that you can get through this clear out move, or just wait for it to happen again. If you miss it, you miss it. But it's definitely been a situation where I've seen a lot of people be absolutely right, but they were just maybe 5 or 10 minutes too early. They stop out and then they never go back. So the key is really don't put yourself in a position to exhaust yourself on the front side of the move. It's okay to, you can start in, put a placeholder to kind of get a feel whether or not you're right. If you're right, you can start to scale in from there. But if not, at least you're not getting exhausted, because there's so many times that, I see, myself included, where you're trying to force a thesis to happen. And then you just are like, what the hell with it? You take it off radar, and then the move ends up coming in. So just keep that in mind. But again, I think the biggest thing has been patience. There's been some good stuff pre-market, whatever the high flyers are, there might be a couple small trades there. But as far as high conviction trades, it's been pretty much 30 minutes after open to kind of get a good feel of what's happening. So, something like HUBC for me will be of interest. 160s was the kind of the clear out move coming into the close there. So I'll be watching any good pops over it, a gap up over it, or a stuff into it, or just a weak open, versus that level as a potential unwind. But this is a recent reverse split. It's had a history of running, so I don't want to just step in front of it. If 160s were to build, that voids the short thesis. DXYZ, very thin one. This one, I'm not suggesting at all that it's HKD, so don't try to, take it that way. But what's interesting is, it's very similar, where it had that little bit of a move, ramped up, then kind of consolidate, and then it had, the big move, right? And so if you actually look at how DXYZ is forming, you've got this move consolidated. Now we've got this big move. So it's either going to peak on Monday, and if it doesn't, and if it starts to build over 50 or 60, that's a 100% avoid. You're getting into some wild territory, and to me, these are the types of risks that I don't want to be involved in, just in case the circuit halt. That's uncontrollable risk. So for me, I need to see it fail. I need to see it stay heavy under 48, and that's when the edge really comes. But the story here is sexy just because, basically a third of it is in SpaceX. I think they have Discord, OpenAI. So it's got all the hot names. It's top 100 tech, I think. So they own like a bunch of private companies, but then there's also some that are public now. And I think, most people look at the NAV and I think it's like 450 or 5. So it makes no sense to be here, but it's no different than something like GBTC. If you guys remember, always had that premium versus its actual holdings. And something similar to MSTR, where, there's this huge premium compared to the Bitcoin holdings, but, nobody seems to care. Everybody's on the wrong side. Everybody had that thesis. Everybody got short because that didn't make sense. And then they ended up getting squeezed. So I think that's kind of where we're at with this particular name. Yeah, the valuation does not make sense, but it doesn't matter on the front side of the move. So again, be cautious. Under 48 is of interest to me. If it starts to build over that level, 50s, 60s, I mean, it literally could go to 100, 200 if it really wanted to. So nothing to fight. Then the last one that I'll be watching is this ACB. I would throw this in there with CGC. Personally, CGC is more expensive to borrow. ACB is essentially easy to borrow. It's like 0.002 or so a share to borrow, versus something like CGC, which might be a penny or two. Plus, it's on Red Show. So if you are actively trading it and you have to reborrow those trades, it can get expensive. So the way that I would compare this particular trade on ACB and CGC is very similar to SOUN. And SOUN I've been talking about for quite some time. You don't need to be, on the front side of the move. If you're doing the obvious move, they know that. They know that. And the second that you get too aggressive, they're going to clear it out, right? They're going to start to push it the other way and do just enough to force you out before it starts to fade off. So, it's very similar to this move on Thursday, where, it's starting to break down, so obvious, so clean. It's heavy. And nope, we're going to clear everybody out to the 580s before we sit it back down to 510s. So just be aware of that. But I think it'll be very similar. And you saw actually that happen on Thursday and Friday, I believe. But let's just go back. You can see right over here, morning shoves, fails. So you want to position yourself versus prior levels of resistance and make sure you're not getting too aggressive so that you can react to situations like this along the way. So those are the top 3 that I've been watching. Otherwise, like I said, there's been some great, swings, and STI has been, something that you guys should be familiar with. We've been talking about it for weeks now. That's been a long position that I've had for a while. So again, no 100%, A+ type setups, but hands off. Let's see what happens. And remember that Monday, everybody's always chomping at the bit, ready to go. And so you don't want to, necessarily be short bias right off the gate on Monday. People tend to soak dips and things last a little bit longer than you would expect. So just keep that in mind. But that's about it for me. What about you, Chris?
Yeah, and just before I get going, I want to do a shout out to Stan, because 2 weeks ago he was looking at CGC and he was saying that he thought it reminded him a lot of SOUN, of just it taking a while for these things to play out. They have options on them. They have kind of a cult following. They have a theme, a sector. Like there's other reasons besides just the technicals why people are attracted to it. And so those are the ones that really take a little while to play out. So like you were saying, Nate, at the very beginning of this, that these moves, you have to have a larger picture view, because they're not the spike in round trips in one day right now. They're taking weeks to play out sometimes, or days at least. But so that was a great comparison from Stan a couple of weeks ago. For me, I'm watching more of the large cap. So one that is on watch is Meta for this week. And what we saw over the last week is I was seeing a lot of relative strength in this. And so basically what that means is that every time, either the market dipped or like things were red, this was always, the one that was up the most or the first one to come back, or there's someone, trying to get into it. And I think that the theme that's kind of developing here is that, we talk about like the AI sector, the AI theme, changing narratives or changing themes as it goes along. And one of the themes that is coming out is that all these AI models, they need a lot of content to train themselves. And so where do they go for that? And it's really things like social media platforms that have, billions of posts from, probably a billion people or something. Those are like, it's like a huge data mine that these AI companies can really use. And so I think the theme that is shifting is who has like the best data out there, because I've seen some articles about some of the AI models almost running out of, or projected to run out of content just from like the regular internet, usable content. But social media content, it's much more curated and things, so it can be useful. So I think that Meta is kind of getting sucked into that AI, data narrative because they have a huge resource of that. So Meta has definitely been on watch for calls for me. And again, I just look if the market gaps down or something, and if this is acting strong, and then the market starts to turn, this is a go-to name to play upside. And even if the market is flat but trending upwards, if you have a good trend day and then this is leading, you can definitely play something with relative strength. So other than Meta, I'm still watching GDX, and that's the gold mining index. And what we've seen over the last couple of weeks, last week Judah and I talked about the gold theme kind of taking place. And when you have an environment where you have a lot of geopolitical tensions, you have some inflation ramping back, it's like gold has historically served that purpose for a very long time, especially in financial markets. And Bitcoin stole some of like the speculative nature or like the hype around that narrative, but gold still has its purpose, and you see a lot of bigger players positioning themselves when the markets are like this. So I think that gold is going to continue to make highs, and I think that something like GDX, which is the gold mining index, is a good way to play that. If you can find individual names that are acting better than GDX, then that's also a good option. But you basically just want to look at, what is the ship? Gold. And then what are the anchors? There's multiple, and what's acting the best out of all those, and that can be your go-to. And then still on the commodity side, we've been watching FCX for a while. Since a couple of scans ago, and just the whole thesis was, as the Fed is running things a bit hot, commodities are coming back up. Oils, coming up on $90, copper's ripping, gold's ripping. So just these names that are involved with commodities, with copper, with gold, I think they're all going to trend well. And they're slow and steady moves. So again, using like a bigger picture kind of time frame of a couple of weeks or a month for a nice move to play out. I think that that's beneficial. And then other than FCX, I have Tesla on watch for relative weakness. And we saw some crazy moves with this, with fake headlines and rallies and dips later on in the week. But if you just take, kind of a broad picture, Tesla has still been, struggling. It's been struggling with rates. It's been struggling with demand. It has, negative headlines, downgrades. You just have all these factors kind of working against it. And I think that that'll continue. And I think that we could easily touch, the 150 level. And then, if the market gets really bad, which I'm not really expecting, but if the market gets bad, this could easily flush down to, 125 over the course of a month or something. But I think as long as markets hold up, I think 150 is a reasonable, kind of area that I'm looking for some kind of base. But, again, these aren't like, a lot of times, like the view that I have, at least on the shorter medium term, it's based on the stock, the environment. It has nothing to do with like the 3 to 5 year outlook for Tesla. I think Elon's an incredible businessman. I think Tesla will eventually be a major company, but you have to remain objective to what is the current environment. And if you're trading something, then just kind of having that in mind. So those are really my main watches for the week.
Did you see the interesting timing on the robo taxi announcement after hours on Tesla Friday?
No. What was it?
Yeah, just that I think the catalyst is August 8th. But I think either the unveiling or whatever, I forget the exact headline, but that's why it popped after hours, which is very interesting that it comes off, the rumor of pulling out of China or whatever, and then that's denied, and then all of a sudden there's this big news to push it after hours. So that turns into an August catalyst for folks to continue to buy it, I guess. So we'll see if it saves it in the near term or if rates will continue to add the pressure.
Definitely. And then I want to do another shout out to there's a great interview out with Larry D. I think Anthony did that interview, so that's on YouTube, and everyone should check that out. He was a former market maker, has a ton of experience in the markets, and definitely valuable and worth listening to.
He's a good dude, and I would say, for me, sometimes he the last one I remember that was like a big watch was like JPM, and he was kind of focused on it on these bigger kind of days. But between that, as well as keeping some of those things on radar that fall off my radar, he's been a really good asset in the room because, as you know, and as I said earlier, you flip through enough charts and the one falls off radar. So it's always good to have people that, have their particular setups, just like you on FCX and GDX and all that stuff. 99% of the time I don't care, but when you start talking about it, I should care. And I think Larry's very similar in the sense that when he starts talking about it, that means, yeah, JPM should be watched now, or, whatever the case, whatever the name may be that day.
Yeah, absolutely. And then we just have a couple items at the end. So Bitcoin halving is still coming up. That's in April 20th or 21st. And that's where basically the mining companies who mine Bitcoin, their rewards for mining get cut in half around that date. So, we've seen a lot of these names kind of come in hard around that narrative, but it could be a situation where it's, instead of sell the news, it's kind of like you could maybe buy the news, like as these companies get into that event and it's already priced in, and, then the narrative flips to, well, their rewards got cut in half, but Bitcoin doubled and now it's stable for the next 4 years. So the narrative can turn very quickly. So I would just have that on radar, that you could have some good moves both directions coming with that narrative.
It could be a lot like a lockup too, right? Where and very similar to small caps, but when there's too many people off sides, when lockups happen like ARM, everybody's expecting it to tank and then it doesn't, and then it starts to go the other way. If there's enough people that are betting that Mara and CLSK and Riot should fade, and it doesn't that day or that week, then yeah, it could have the inverse move, which doesn't necessarily mean that's the right move, but it could just be delayed by 3, 4, 5 days before the bottom finally drops out. So just something to consider if on that day it's not doing what everybody says it should do.
Yep. And then did you want to touch on Root at all?
Yeah, Root was another one just to, again, this is just, sometimes I like to go over things, not to say I told you so, because I surely did not take this trade. Maybe I should have, but we had a discussion about it, and I like to review these kind of things. We talked about the wicks over here. We talked about, kind of using this level sort of as that risk for that potential long. And, again, just like SMCI, when we discussed it, dividing out that number, people look at this and they say, oh, man, this thing just went 5 to 10 to 20. That's up too much because it's $15 per share. But if you had seen a stock go from 150 to 3 to 4 on blowout numbers, you wouldn't necessarily think the same thing. You just think it because you haven't seen a stock go from 5 to 10 to 20 to 30 in a long time. So same sort of thing here. We consolidated at basically 3 to 5. We consolidated at 5 to 6. And now we're doing that next move, 8 to potentially 10, maybe 12. It seems crazy that it could go to 100, 120 or something like that. But it does make sense. So just be cautious making, assumptions or decisions based off the fact that you haven't seen something run up so far. Because look, when these things go up, just like that I always forget this ticker, DYSX, DXYZ.
XYZ.
Yeah, just like that. I mean, it just, you look at it, it's up, it was $30, it's up $15 on the day. You're like, wow, that's way too much. All of a sudden it's up $30 on the day, right? So you want to stay away from things with outlier range on the front side of the move. Doesn't mean you have to ignore them. Doesn't mean you can't touch them. But when things have outlier range, and outlier volume, it is very important to not step in front of them.
Yeah, totally agree. So we covered a lot of good topics this week, and I would suggest that people leave a comment of what you would like us to, really talk about and cover, because this is a living, breathing, scan. So if you have questions on a particular kind of setup or a particular kind of theme, we can touch on that. So really just share what you would like to see on these scans in the comment section, and we will try to get to them. So Nate, it was great to have you on, as always. And I would also encourage people to check out Investors Underground and really just give it a try, because you not only have myself, Nate, you have a lot of traders in there that are sharing their best ideas. You can trade live alongside them, and it can really help to elevate your trading game. So it's definitely worth the risk, and I would recommend that everyone check that out. So Nate, any closing comments?
Yeah, like you said, as far as the room, one thing that we just kind of launched is like a beta test. It's just kind of version 1 of potentially 10, but shared price alerts. So I've always put my price alerts in there, and it's sort of for me. But now you can choose to share them. Over time, we'll have particular setups you can tag and things like that. So if you wanted Chris in a particular setup, like a breakout type trade, or if you think he's better at failed follow through, you just want to see his failed follow through setups, we're going to have that opportunity, that option for you to be able to kind of follow some of the ideas and why did they put this particular price alert, and if it falls off your radar and it's on somebody else's, it's going to be one more chance of actually seeing it than missing it. So so far, I think it worked out really well the last week or two, but we're still testing it, and I think it's working well. So yes, we'll see you guys in the room on Monday, and have a good rest of the weekend.
Have a great week.